Good morning, everybody. How are you? It is Yvette Best, the People's Tax Accountant here at Best Services Unlimited. And today we're going to be talking about 5 hidden ways to boost your tax refund. Let me share this out to a couple of people and invite some people in, and then we're going to get started right away. Okay, I think I shared it to enough people. So let's get started. First, again, let me say good morning on this cold Georgia morning. I hope everybody is out there bundled up because it is a little bit nippy out there. Um, First, I want to talk about how we're all in shock about the government shutdown. The IRS has said that they are going to release refunds during the government shutdown, and that is a good thing. But you also have to think about if there is a government shutdown and you have a problem with your refund, there will be no one for you to talk to because during a government shutdown, you're not able to order transcripts. You're not able to call to ask for tax information. So although e-filing is electronic, so of course, yeah, I can electronically file my return. They can accept it. They can issue my refund. However, you will not be able to talk to someone in case you have a problem with your taxes. And that is only during the government shutdown. So hopefully e-file season is opening on January 28th, my birthday. So I'm just going to say that's my birthday present to you. So hopefully by that time, the government shutdown will be over and everything will go back to normal. Let's just keep our fingers crossed for that one. But the topic today is we're going to talk about 5 hidden ways to boost your refund. So number 1 is that I want you to rethink your filing status to boost your refund. Now, most people who are married filing joint will file jointly. They will add both of their incomes together, and then they will say, okay, whatever refund I get, that's what I'll take. But I want you, people who are married, to rethink that this year because you got to think. 1, the standard deduction for married filing joint people is $24,000. Separately is $12,000. Now, depending on your income, depending on how many dependents you have, you can probably maybe lower your tax liability by filing separately. And the one thing about filing separately, if you're not eligible for earned income credit, you are still eligible for the child tax credit. And this year, that amount has been raised to $2,000 per child. And the refundable part of that money is $1,400. So that's huge to lower people's tax liability. Also, I want people who are filing and are taking care of their parents to think about their filing status because taking care of your parent is one of the ways you can be eligible to have the head of household filing status. So a single person, their standard deduction would only be $12,000. But if you file head of household, your standard deduction is $18,000. So that's a $6,000 boost just for changing your filing status. So first, I want you to rethink your filing status to boost your income. Boost your refund. So number 2, because I got all my stuff written down. I do not want you to shy away from your tax deductions. People who have home-based businesses, if you keep good records and you keep good receipts, I do not want you to shy away from your deductions. Also, people who are giving money to charity, please take into account the time that you spend in your car driving to these charitable events, taking things for charity, dropping off stuff to Goodwill, dropping off stuff to other nonprofit organizations, because those charity miles are also deductible. And this year, I thought I had wrote it down, that it is still 18 cents a mile for any charity miles you may have. So that's another boost that you can do for your refund to lower your tax liability or increase your refund by taking into account your charity miles as well as your charity deductions. And then number 3, I want you to maximize your IRA and HSA deductions. I want you to also contribute more. If you know, with your IRA, we can contribute up to $5,500 this year, $6,500 if you are over the age of 50, and that is a dollar for dollar deduction off your tax liability on your 1040. So if you have some extra funds, boost up your IRA contributions as well as your HSA contributions. It will do a lot to help boost your refund and reduce your tax liability. And then number 4, which is something that's past, but I want you to keep it in mind for this year. Now, most people will pay their mortgages at the first of the year, but if you can make an extra payment by December 31st, that will boost how much interest and that you have paid towards your mortgage, and it becomes deductible in the next year. So this year, if you're getting paid bi-weekly, it might be best for you to contact your mortgage company, tell them to split out your mortgage payments and take money from you bi-weekly, because that will give you an extra mortgage payment, which will actually pay down the interest that you're paying on your loan, and it will be included in 2019 when it's time for you to file your taxes again in 2020. And then last, be credit savvy and refund happy. Reason that is, it comes straight from my book, Maximizing Your Tax Refund. Credits are better than tax deductions. They just do more for you. Credits reduce your tax liability dollar for dollar. When you have a tax deduction, if it's a 100% deduction, probably only 70% will lower your tax liability, but a credit will lower your tax liability 100%. And then you have a lot of credits that are refundable, such as earned income credit, the child tax credit, and the American Opportunity Credit for children who are in college for their first 4 years. And these credits are huge in reducing tax liability and also giving you a boost in your pocket. So those are the 5 ways that we can actually take and reduce our tax liability and boost our refund for 2018. And these things are still going on now. These are things you can do right now if they're in place to actually have maximizing your tax refund. So just to recap, 1, I want you to rethink your filing status. I don't want you to shy away from your tax deductions. I want you to maximize your IRA and HSA contributions. I want you to think of the timing of your refund, and that is basically based on paying your mortgage payments. And then also being credit savvy and refund happy when you're dealing with the differences between credits and tax deductions. So I just want to say thank you for everybody coming out today. This is 2019. It's your time. If you're ready to take the leap to boss up, because I just posted a post today, you can't be fired or furloughed if you work for yourself. So this will be probably a time for you to start thinking about ideas that you have, that you may want to start a business of your own. Because, once you have a business of your own, it's something that you can leave to your children, your legacy. And of course, you can use your business income to become debt free. And right now, 2019 is my debt-free movement. Is something that's very good. I'm one of the debt-free people. So I could tell you life is great when you don't have a lot of debt. So get in touch with me, contact me. I'm gonna tell everybody Happy New Year. Please live all of your dreams. Don't be pushed by your problems. Be inspired by your dreams. So with that, I say have a great, great, great Thursday. Do something different today. Do something that scares you. Do something that you fear. and just go out there and do your best. I'm doing it now. You know, I don't like Facebook Live, so I'm trying to get a little bit more accustomed to doing Facebook Lives. And I'll be coming to you probably once a week on Thursdays, and we'll talk about different things. But today, think about the 5 ways that I just gave you to boost your tax refund and lower your tax liability. Have a great day, everybody, and be best in whatever you do. Bye.